Do you know that feeling you get when you fall into a routine or a rut, like you're on autopilot? Well, new research shows that the average American is going to spend about 10 years of their life just kind of coasting along on autopilot. And guys, that kind of reminds me of when investors start out using a set it and forget it target date fund in retirement. But when is it actually time to abandon that autopilot for a portfolio that is more personalized?
Well, I do love the philosophy of set it and forget it. You know, that Showtime rotisserie and barbecue. I mean, I think everybody had one of those in their house. I think my father-in-law actually had bought us one for Christmas, and we use that thing a lot. Now I just stop by the local grocery store if we want to get a rotisserie, and makes dinner pretty easy. The thing that I would say first and foremost is, saving in any vehicle is a good idea. One of the challenges I think that a lot of investors don't do is they don't make that commitment to put money into their retirement plan. In fact, the good news is if you look at 2023, the contribution limits in 401ks and most traditional savings vehicles are going out. But if you start to narrow that down and you take more of a sniper shot approach, the year 2020 really points out some of the negatives of target date fund. Both stocks and bonds have been down significantly this year. And the philosophy was if you had money in stocks and they were going down, hopefully bonds were going up, and they kind of offset each other. But, in a year like this, when you have them both going down, it can be very painful. In fact, it can be very painful for somebody that's close to or in retirement time. What happens is as somebody gets closer to retirement time or they're more risk adverse, they're more conservative, the strategy will increase the money in bonds, which until recently, bond rates have been historically low. So you were forcing a lot of your money into a category that was paying historically decade low rates. Now, as rates started to go up, bond prices have been going down, thus pushing the prices lower. And of course, we've had the meltdown in the bear market and the stock market, which is why you've got kind of a double whammy effect that's happening. And it, could be for a while that will continue to happen as the Federal Reserve has indicated their plan is to raise interest rates until they can combat inflation. What I would encourage the listeners to do is consider a different approach. The approach that we've been talking about for the past 20 plus years is called the independent income system. It's our trademarked approach where we look at the different threats and opportunities. So instead of having the traditional 60-40 or the target date type strategy, what I would encourage somebody that's close to or in retirement time looking at the independent income system and developing buckets of money that are designed for different time frames to accomplish different goals. Using that approach may help you feel a lot more comfortable to weather through the environment that's out here and get you to be able to be in a position that can help you accomplish what those retirement goals and dreams are. So I think there's some ways that you can take a look at diversifying and changing the overall approach, and especially for those of you that are in target date funds and wondering whether a target date fund is a good investment.
It's not to say that you did it wrong when you elected to go into a target date fund when you first set out in the working world or first, enrolled in that 401k. But as you get closer and closer to retirement, think of it kind of like if you're driving along cross country and, you're on cruise control for the bulk of it. But as you get closer and closer to your destination, it makes more sense to start paying attention and really take heed to, make sure you don't miss the exit, things like that. Make sure you don't continue to stay in something that may not necessarily be as strong as you get closer and closer to retirement. Go to Americasretirementheadquarters.com to learn more about the independent income system, or you can just do a Google search and it's right there at the top. I posed the question earlier, if you've got the stomach to stay in the market, it always does seem to come back. But in the interim, in the downtimes, this is where something like the independent income system really comes in handy. So to learn more about it, again, go to Americasretirementheadquarters.com or give a call and then speak with the team directly, 419-794-3030.